What is up, pip killers? Well, look at this trade. I'd like to go over literally entry by entry to the exit to the minute exactly how we took 120 pips on Wednesday trading. Now, the trade started in Wednesday. We actually took the profits in Thursday. But the very important thing to understand is that when it comes to scaling into a position, okay, what gives you the conviction is sticking to a process, sticking to a mathematical process. And what I'm going to show you right now is exactly how the FXPRIME algorithm picked apart one of the biggest trades that I have ever seen a computerized trading system do. Okay, for those of you who are new to my videos, I've been trading for over 9 years now, and it's taken me the last 9 years to develop the FXPRIME algorithm, which is a computerized trading algorithm that determines entry and exit points in the foreign exchange markets. Now, what you see here, it may look like a bunch of lines, but these are specific entry and exit points that the system is determining. And the thing about a computerized system is that it removes all of the doubt, all of the questioning and emotion involved with trading. In fact, it's the main reason that every bank and hedge fund and all the great traders of the world now employ electronic trading. About 85% of all trades that go through the major brokerage houses are completely automated, electronic trading, meaning it's not done by discretionary traders. Now, if you give me the next 5 minutes and you look at this video, I guarantee that you will walk away knowing more about trading than most entire educational programs out there. Now, that is my promise to you, so turn off your phone and look at this for the next 5 minutes, because I'm going to show you exactly how we tore apart a 119 pip trade. Okay, so I'm going to go through these trades fairly quickly. Each of these bars represents the time axis where the trade was taken. Okay, I'm going to put my cursor over the price that the trade was taken at. Now, our first trade was a short, okay? The short occurred at 141.20, and the time was 8:48 a.m. And you can see that right here is 8:42 a.m. and 141.20 would be right here. Short was taken. The next trade was taken, another short, at 9:11 a.m. Okay, so right here, 9:11, and the price was 141.48. So right here. Okay, another short was taken. Now for the next trade, we had another sell order. The price was 141.78. So right here on the top of the candle, another sell order was taken. We move over here to 141.84. Our short was taken, and the time that it was taken at was 1:48 p.m. Okay, 1:48 p.m. You can see that right there. Now, the system, I updated it, it accidentally said AM, it meant to say PM, and you can see that on the phone, it actually did come through at 1:48 PM, okay? Little discrepancy in the system, sometimes you update it, and the AM, PM gets mixed up because I put in the wrong character. So, the next trade was at 2:09, okay, 2:09. And the price was 142.17. 142.17, so right here. Another short position. So we're adding to this short position, and each time we add to the short position, what it does, if we do it properly, is it keeps elevating our price that we got in at. Okay, so if it's basically a form of averaging into a position. Okay, now at this point we're short. A lot of the market keeps going up, and this puts a lot of traders on edge. And here's the difference between a system and discretionary trading. The system sees historically what's going to happen in the future. Discretional traders react to what's happening right now. And if you are a discretionary trader, you cannot win if you are reactive. You have to be making positions and determining entry points and exit points based upon what is actually going to happen, not what is happening right now. So our next short position came in at 9:51 a.m. and that was another short at 142.42 is the price right here. So another short position was established here, and so we keep averaging into this short, and people are wondering, well, why wasn't there a profit taken here? Why wasn't? And we could have done that. It depends on the cycles, okay? That it depends on the frequency that your algorithm is operating on. Some of the algorithms are a little bit more longer term. This particular algorithm had a 24-hour trade timeline. So basically the trades are meant to be taking profits every 24 hours at least, okay? What this does is it minimizes the amount of time that you actually have to watch your trades, okay? If you're working all day or you have a very busy schedule, you don't want to be intraday trading or rather intraday trading, because what happens is that you become a trader who overtrades, number one. You're always in front of the market, number two, and number three, there's no downtime for you to do anything else. So unless you're a professional trader, that type of trading frequency is not going to work out for you because it's absolutely too time demanding. However, the algorithm, the FXPRIME algorithm, is designed for people with normal schedules, and it's designed to maximize the frequency of trades. So this way, you are taking profits almost every 24 hours, at the max every 48 hours. But in addition to that, you're also not having to watch the market every single tick. Now, let's get to the last trade. Our last sell order was at 10:56 a.m. and it was at a price of 142.71. Okay, 142.71. So it was the very top of this candle. Look at that, almost to the pip. The high was 142.74. So the algorithm called the high of this candle to within 3 pips. Pretty accurate. And the time you can see right there, all right, 10:55, 10:56. So the trade actually came through on the system at 10:56. Okay, now what ends up happening is at this point everybody's wondering, what in the world is this algorithm doing? It keeps shorting positions. We keep going into this short position. It's adding to it. And a lot of people, if they are discretionary traders or new traders, they're not going to understand what's going on here. But what's happening is that the computer system is minimizing the risk. By constantly building into a position gradually, it's minimizing the risk. Now, what ends up happening is our average price is right around here at 141.98, okay, or 141.94. Somewhere in there is our average price. So when this ticks up, of course, a lot of people are ticked off because the drawdown at this point is, 50 pips, 60 pips. They're wondering to themselves, oh my God, I got to get out. And that is the difference between a computer and a discretionary trader. Again, the computer has zero emotions. It doesn't care about the drawdown. What it cares about are the profits that are taken, okay? So it is a profit-driven system. And because of this, because there is a predictive ability to the artificial intelligence algorithm, there is no fear that is experienced when there is a drawdown, because every entry point is taken at a certain mathematically determined point. Now, we come over here, and what ends up happening is the rest of the day, very light day, okay? So it was a fairly light day, and then all of a sudden we get a tick up and then an absolute crash, okay? As a matter of fact, the total amount of range for this bar, if you look at this bar, the high of the bar was 142.83, the low of the bar is 139.64, and of course this was a news play. Okay, it was a news play. However, regardless, the algorithm could tell that based upon the price action prior to the news, the direction of the trade. So if we look at this, the range, look at that range. This is insane, guys. This is insane. It's pretty much a 300 pip, 320 pip, 319 pip range, if you could take the entire bar exactly to where it went. But the most important part is that we bought to close right here at the the white line, 140.75. Okay, was where we closed. Now our profit on this was 119 pips. This one play took us 2 days to accomplish. 119 pips was our actual profit. And it's all documented. All the members saw this trade happen 100% real time. And in addition to that, because we scaled into it, and the members know that there are certain rules to our positionings when we scale into a position, exactly how much of their portfolio and what those lot sizes should be when we scale into a position to avoid putting too much of the weight in one area. So we had just enough weight for this to count as at least two 120 pip trades. So this made our entire week right here with one trade. And for a lot of people, what they look at is, well, the risk was, tremendous. But the thing that we have to think about is that the risk was not tremendous. There was several points where the algorithm could have gotten out and did not, because there was an intentional bigger play in mind that the algorithm was determining. Now, here's the thing, guys. This type of play doesn't happen that often, but you can see the predictive ability that when the algorithm is shorting, okay, and it's building into a position, it's knowing that there's something in the future that's going to happen. And we took profits on the way down, and this was still going down as the text messages were reaching all of the members. So some members, the system clocked out at 120 pips, but I had some members email me they made 180, 190 pips. So the thing to understand about an algorithm is that this type of algorithm, the FXPRIME algorithm, it's artificial intelligence. The members pay $97 a month to access the signals. Most of the members made 3, 4, 5 months of their entire fees for FXPRIME in one day. Now that is tremendous value for the traders, but beyond that, when people see these trades occurring, it's enough to give them confidence, because when the trade works out, and traders lack confidence, especially beginning traders, but when a trade like this works out, people can say, okay, now I see why 85% of the order flow that happens on Wall Street and around the world in foreign exchange is done by computers. So guys, this type of trade, awesome play for Wednesday. I'm going to keep bringing videos to you guys, and please actually subscribe to the channel. I'm putting out these videos to help you guys, all of the new traders out there. And if you are not yet a member of our Telegram feed, please do check out the Telegram feed, https:/t.me/FXPRIME. It's a free feed, guys. And right now we're on a big streak, 13 consecutive winning trades for over 300 pips. And let me tell you, a lot of people are really raking in money on these free trades. It's a very, very serious channel. Every single piece that I put out on this channel, if it's an update, it's either a trade or something that's going to help you with your trading endeavors in the future. So I hope to see you guys there. Thanks for watching the video, and don't forget to subscribe to both the YouTube channel and the Telegram channel. I'll see you guys in the next video.